Good morning, everybody, and welcome to Live Trading Room's daily Forex analysis. Today is Monday, February 12, and it's 10:30 in the morning. Let's see how the Forex market is performing through the index grid of our best and worst dashboard. The British pound is in first position, gaining 1.15% on its currency basket, followed by the Australian dollar, ahead by 0.69%. The euro is gaining 0.68% on its currency basket, and the Swiss franc and the Canadian dollar are just above parity, with a percentage gain of respectively 0.16% and 0.10%. The yen is losing 0.32%, the US dollar is down by 0.65%, and the New Zealand dollar is losing 1.80%. The power strength gives us the British pound 100% long and the US dollar 100% short. We have high percentages on the euro and the New Zealand dollar also, respectively 85% long and 85% short. The best trades so far on the Forex market are British pound New Zealand dollar ahead by 0.37% and Aussie New Zealand dollar gaining 0.34%. Now let's go to the charts to analyze the majors. Aussie US dollar is moving in a slight bullish tendency just below the previous daily high, which was already broken during the session. We have a bullish price action at a scalping and intraday level, and we're just at the entry level of the bullish zone of the target geometry at 0.7824. We have an RSI above 50 on every time frame except H4 and the daily. We have a percentage confluence up to the yearly level with the exception of the monthly time frame and a statistical confluence. So with a 57% long Australian dollar against a confluent US dollar above 0.7824, we may have a continuation to the upside. The euro dollar is moving in a slight bullish tendency after the market found support at the intersection between the monthly moving average and the support area around 122. Now the market is again correcting down toward the entry level of the bullish zone of the target geometry at 122.59. In fact, we have a bearish price action at a scalping and intraday level with a breakout of the previous lows on every time frame except H1. The pair is still gaining 0.10% on a daily basis, but we see the RSI turning below 50 on the intraday time frames. Should the market remain above 122.59, we may have a continuation of the bullish tendency. Below the daily opening, we should change attitude and look for bearish signals. The cable is moving in a bullish tendency. The market just corrected down from the intraday high marked at 138.75. But now price action is turning bullish again at a scalping level. The pair is gaining 0.18% on a daily basis, and we're above the major moving averages of the EMA dashboard. We have a confluent British pound against 100% short US dollar, so should the market remain above 138.34, we may have a continuation of the bullish move. Kiwi US dollar gapped down at the opening of the market, then started to move in a bullish tendency, marked an intraday high at 0.7276, only to correct down violently and descend below the daily opening. The pair is now losing 0.10% on a daily basis, and we have an RSI below 50 from M5 to the daily. Both currencies are very weak on their respective currency baskets, so we can expect a limited daily range. Should the market descend below the daily opening once again, we may have a continuation to the downside. Should instead the market close above the entry level of the bullish zone of the target geometry at 0.7249, we may have a continuation of the initial bullish move. US dollar Canada is moving in a slight bearish tendency inside the no trade zone of the target geometry. The pair is losing 0.10% on a daily basis with a bearish price action at a scalping and intraday level and a breakout of the previous lows from M1 to M15. The RSI is below 50 on every time frame except H4 and the daily. We have a 71% long Canadian dollar against a confluent US dollar, so should the market close below 125.62, the entry level of the bearish zone of the target geometry, we may have a continuation of the bearish move. US dollar Swiss franc is also moving in a bearish tendency. just above target number 1 of the bearish zone of the target geometry at 0.9375. The pair is losing 0.18% on a daily basis with a breakout of the previous lows on the H4 time frame, and the RSI is below 50 on every time frame. With a 57% long Swiss franc against 100% short US dollar, should the market remain below 0.9381, the entry level of the bearish zone of the target geometry, we may have a continuation to the downside in direction of the monthly opening at 0.9307. Now let's close the analysis with the US dollar yen, which is moving in a slight bearish tendency just above the entry level of the bearish zone of the target geometry at 108.66. We have a bearish price action from the scalping to the multi-day level, a bearish percentage confluence up to the yearly level, and an RSI below 50 from H1 to the monthly. With a 57% short yen against a confluent US dollar below 108.66, we may have a continuation of the bearish move. That's all for today's analysis. Thank you for your attention. Good day and good trading from Live Trading Room Trading Community.